We've had a couple of clients that have put the money in the policy and then they borrow against it to go buy the engagement ring. You have a down payment on a house. You have down payment on land. Whatever it is that you want to use it for, that's what it is available for. There is no one on the other end of that saying you can't have access to that money. No, no, no. Sorry, sucks to be you. We're not giving it to you for that because we don't see fit. That is not the case. That can be very dangerous if you do not know how to manage money. Hello, and welcome back to the podcast. Thank you for being here. Hey, couple of things before we get started. One, if you're not listening on Spotify, go there because it's now video. We're uploading our video on Spotify. Obviously, I'm excited about it because I've been talking about it the last couple podcasts. And number two, if you've not gotten the books yet, or if you've gotten the books and you have family members that should have them for Christmas, which is probably every family member you know, we are doing a Christmas sale. So you can get the bundle at I think it's a discount. And then I'm a great salesperson over here. You can get the bundle and then you get both audios for free. So make sure that if you are looking at getting anybody the books for Christmas, stocking stuffers, whatever, go to withoutbank.com and get your bundle. It's both of my books, Nelson's book, and then both of my audios. So, all right, today, let's talk about taking loans from the policy. What should I take a loan for? And so let's just first be very clear that we are taking a loan. We are not taking money. It's a good opportunity for me to help you guys with all of your language that we are taking a loan. We are borrowing against the policy. All right, so a lot of people get confused about this. It is because we have been trained to think one way and we have not been told, hey, you can use your imagination for whatever you like. And so we are not actually using our imagination, right? And so when people say, well, Mary Jo, can I use this for a business loan? Yes, absolutely. You can use this for a business loan. Can you use it for a loan to go on vacation? Yes, you can go on vacation with it. You could borrow that money to somebody. You could be the lender. You could use that money to send your kids to college, put braces on the kids. You could give money to a nonprofit. You could lend money to a business startup. You can do absolutely whatever it is you want with that money. And people get confused because if you own the policy yourself, so you personally own the policy, you are the one that is owner. It is not your LLC that's the owner. And so people think, well, if the LLC doesn't own it or the business doesn't own it, then I can't be giving money. I can't be lending money to the business. Yes, you can. And so if you personally own the policy, you can lend money to the LLC. You make a contract with the LLC that says Mary Jo is going to lend money to Without the Bank. Mary Jo and Without the Bank decide that Without the Bank is going to pay this money back at 9%. So I, Without the Bank, pay the money back to Mary Jo at 9%. So now I, Mary Jo, have to claim interest income. Without the Bank gets to write off the 9% as a expense because it's interest. Mary Jo has to claim any interest that is above and beyond what the insurance company charges me. So if the insurance company charged me 5%, then I'm going to have to claim 4% as interest income. So because of that, people get super confused. But it doesn't matter what you do with the money. The insurance company is not asking, did you go on vacation with that? Because if you went on vacation with that money, we are not lending you any more money. That's not what they say. They don't even care. So this could get you in trouble, obviously. But people get stuck and they're like, well, I shouldn't be borrowing money to pay my taxes. Yeah, why not? I put my tax money in as premium, and then I borrow against it and I pay my taxes, and then I pay it back throughout the year. And so how do you do that without having to pay premium every year? Well, when we start a policy, we can set the policy up so it accepts more money year one. So if we're putting more money in year one, I'm going to maybe set my policy up so that accepts my taxes for year one, and then I can borrow and pay back, borrow, pay back. But year two, I'm not going to pay that same amount of premium. I'm going to lower the premium for year two. So there's some ways to do that. Well, what if I can get a lower interest rate at the bank? Then go to the bank and get a lower interest rate and use your policy for something else that you're going to want down the road. It's liquid. It remains accessible to you so that you can use it. And so when we're looking at what is it that we want to do, I used my money as a startup. I started my first policy. I cashed out my 401k. Or well, I didn't have a 401k because I never believed in it, but I had an IRA. And so I cashed out my IRA and I used that money to start a policy. That policy I borrowed against to start my business. And I used it to pay for living expenses, frankly, because I didn't have the money coming in because I just thought everybody was going to just love this idea, which is not the case. But I used that money to live because I didn't have the income coming in from sales of life insurance right away. It takes about 3 months for an agent to get paid in this industry. And so from the start of us doing an application to the end of your payment, it's going to take a while for somebody to get paid. So I needed some startup. I needed some living expense money, right? I needed to buy a computer. I needed to buy monitors. I needed to do all that stuff. And of course, I didn't do anything fancy because I only had like $8,000 or $6,000, whatever it was. My very first policy is not structured like how I structure them today. But anyway, tangent. So you can use that money for a business startup. Whatever it is that you're going to normally buy in life, you can use the policy for. The only thing that I'm going to say is don't be borrowing money to buy a cup of coffee. Don't borrow money for silly stuff like clothes. Like, there's just no point in that if you're going to be like Nelson says, oh, you could get your all of your money should go through a policy at one point. At one point, people read that and go, okay, that should happen day one. They miss the little part in Nelson's book that says it should take you 20 years to get there. Okay, so keep that in mind. But what if we have a child's wedding to pay for? There you go. What if we have infertility issues and we're doing IVF? Anyway, what if we're doing fertility stuff? Use it for that. We've had a couple of babies born in our client group that they have used the money for fertility stuff. And now we have babies from it. What about an engagement ring, right? We've had a couple of clients that have done that too. They've put the money in the policy and then they borrow against it to go buy the engagement ring. You have a down payment on a house. You have down payment on land. Whatever it is that you want to use it for, that's what it is available for. There is no one on the other end of that saying you can't have access to that money. No. Sorry, sucks to be you. We're not giving it to you for that because we don't see fit. That is not the case. That can be very dangerous if you do not know how to manage money. But if you buy an apartment building, if you buy a rental property, if you buy a car that's a lemon with it, any of that stuff happens that whatever you did with the money kind of went south on the other side because you made a bad decision or something happened, somebody screwed you on the other side of that business decision or business partnership, you pay that back over your lifetime if you want. It does not matter. The bank is not knocking. Nobody is going to file bankruptcy on you. And a lot of people ask that too. Mary Jo, does this get reported to the credit bureaus? No, it does not. Absolutely does not, because it's not a bank loan. But if you have filed bankruptcy, you can't get a policy. If you filed bankruptcy in the last 2 years, you can't get a policy. Your bankruptcy has to have that release date, or I forget the name of that too. Your bankruptcy has to be released, and it has to be 2 years after that. The insurance company doesn't want a loan out there forever. That's not the point of it. You can pay interest forever and be okay if you need to, but that's not the objective. The objective here is to make sure that it gets paid back. Nobody cares what you use it for. When you are thinking about, maybe some people are sitting here thinking, I don't have any reason to use it. You don't? No reason at all. So you're going to put new tires on your vehicle. You're going to go on vacation. You're going to put that all on a credit card. So there's no reason to use a policy, but there's a reason to use a credit card. If we have the policy, why not use the policy just like we would use our credit card? The interest is lower. The payback is controlled by you. And there's a limit of money, just like there's a limit of money on your credit card. There's a limit of money in the policy. However much you've put in and have access to is all you can borrow. Like if that's kind of in a holdup for you, if I just don't know what I would buy it for, or I don't know what I'd use it for, I don't care if it's a lawnmower. Okay? We've used our money for that. I've borrowed against our cash value to buy lawnmowers because we needed a riding lawnmower. And so I'm not going to put that on a credit card. Why would I pay cash for it? That's quite an expensive purchase. And so I've decided, anything over X amount is what we're going to borrow against the policy. Some people say anything over $1,000, we're going to borrow that from the policy against the policy, and then we're going to pay that back. Some people, it might be a $5,000 purchase. Some people, it might be a $300 purchase or a $200 purchase. It's just going to depend where you're at financially, how much money you have in your policy, what you're doing in life. All of that is going to matter. Hopefully that gives you some idea of the freedom you have, that there's no right or wrong of what you want to borrow cash value for. Now, I have colleagues that borrow cash value for stuff I would never borrow cash value for. I just wouldn't do it. And so even our mindsets are different. I am far more conservative than the majority of my colleagues. Right or wrong, that's just how I am. And I have mind stuff that, I'm always thinking about this too. Remember, the concept is the thought process around it. And so I'm always thinking about that. I'm always listening to what other people are doing. But what are you using money for on a daily basis? What are you paying cash for that you maybe shouldn't pay cash for? It's always funny when we start a policy and somebody says, well, I can't really pay that full premium right now. I'll pay it throughout the year, but I can't put it all in right now because I have taxes to pay first. Then put the money, pay your full premium, borrow against it in 10 days, and use it to pay taxes. It's one pool of money, right? It doesn't ultimately matter. Or I can't pay that full premium because I have a feed bill or a seed bill or a chemical bill or whatever. I got to pre-buy something. Well, okay, then pay your premium, borrow against it, and use it to go do whatever it is you were going to do. Oh, Mary Jo, I can't pay my full premium because I need to buy furniture first. Okay, if you got the money to pay cash for the furniture, pay your premium in full, let's borrow against it, and then let's go buy furniture. So we have to really think about the fact that this is the and asset, right? We get to use this for whatever we want. It's not or. It's not put the money here or buy the furniture. We can pay our premium and we can borrow against it to buy the furniture. So we have to really get that into our brain that this is a dual purpose. We are not paying for term insurance where our premium is paid and then everything is gone. That is not the case. I hope that helps. I hope that kind of gave you some ideas about what you should be using your policy for. A lot of my clients are not using their policies. They're like, oh, I just don't need it yet. If you don't need it yet, then you're not putting enough money through the system. You're not paying enough premium. If you have a policy, client of mine or not client of mine, and you're listening, if you have a policy and you are not borrowing cash value, then you do not have a high enough premium. You should have to borrow cash value for large purchases. Cash should not be used to buy a vehicle. I don't care if it's a $5,000 vehicle. Borrow that from cash value. If you don't have to because you've got $50,000 in savings or $100,000 in savings, why? What is the point of that money being there? You are losing uninterrupted compound interest the rest of your life. Plus, we're losing the death benefit. Okay, I digress. You guys, go get your Christmas special on your books. Go buy Christmas stuff. Get yourself the books. Now is the time to do that. If you have not gotten the book, get scheduled. I think I am end of January still. So I am not actually booking out quite that far. And so get on my schedule, get on John's schedule, whoever schedule you want to be on. And then we'll talk to you, see what we can do for you, and go from there. Otherwise, you guys have a fantastic rest of your day.